Hey, what's going on, everybody? I wanted to make this video in regards to today's trading session, Friday, July 11th on the S&P 500 E-mini futures. Basically, I wanted to make this video talking about the setups that I missed today that were pretty decent quality. Didn't have exactly what I was looking for in the real time for me to execute on these possible ideas long. Um, I just wanted to give you guys kind of an overview of what I saw, how I was viewing the market, and the quality of the absorption and the bids and the offers that were being filled, pulled, and placed in the market to give me context for possible trade ideas. So, in this video, I'm going to go over basically this first trade that I was looking to possibly long the market anywhere below pretty much the 82s, ideally the upper 70s. I talk about this because a few days ago, these 76s were supported very, very nicely for a very large rally up, which made another dip and then an even larger rally up. So in this area, I was looking for buyers to come into the market passively, which I could play long, finding them enter the market in real time, finding sellers getting trapped. That was the first thing that I was looking for. I really like this area of structure down here as support to the upside. So basically, we broke beneath this previous low here at the 83s. And basically what happened was, well, we were down here in the pre-market actually, and we had a nice bounce up, right? We came up here, rejected at the open at these 95s, 96s, fell down into these 80s. And I want to show you guys something on this volume profile. You see all this red right here? This is general negative delta. This basically means there are more trades, more size, sorry, hitting the bid than lifting the offer. This means that there are more aggressive sellers in this area than aggressive buyers. Now notice how in the candlesticks here, the market's moving down, 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 all this negative delta builds, and then the price pops up. What is happening to those sellers in there who are getting short in here, who are trying to drive the market down right in here? The market pops up on them and it squeezes them out of their positions. So something that I was looking at on Bookmap during this dip over here was after this failed high of day up here, we started to move down quite aggressively, right? There's this one dip, got bought up, and then sold right back through, slammed down through that. Low volume node created there at the 87s. Every pop-up defended, all the way down until about 946. Okay, you see this bid in here at the 85, 75s get filled at about 938. So right about in here, that bid gets filled. That was a standout bid. We see all this selling, right? All this selling, and the sellers are achieving lower prices. They're achieving lower prices. Look, lower prices, pop-ups failing, lower prices, and now look at this right here. You see how all of these red bubbles are kind of clustered together in this very tight area? And look at this double bottom here. We came down on this bottom, some more buying, okay? Came down again, could not break that low. It held right there. Look, double bottom on the 1 minute. You see that? I'll make that bigger for you guys. Double bottom on the 1 minute right there, okay? This bid got eaten. The buyers popped it up. We sold off back into an instant bid right here. And all this selling came in right here, and they could not drive it down through this low. So now there's absorption. What this looks like on the footprint is this right here. You see negative 200, negative 100, negative 100, negative 100, right? Good negative delta pretty much anywhere below the 80s, right in here, anywhere below the 80s. This bid got filled. All these sellers sold into that. Now the sellers are having a struggle breaking it down beneath those 80s and holding, okay? Every time it comes beneath the 80s, it pops up. Sold off, pop up, sold off, pop up, sold off, pop up, sold off, pop up. Now, right here at about 9:47 in 30 seconds, I was thinking, okay, I'm liking this absorption here. I'm liking how these sellers are unable to break this down. We've had a nice sell-off from this high a day, about 15 points, okay? We are in the area, again, on this 1 hour chart. Look over here. On this 1 hour chart, we're exactly in this area that the passive buyers probably supported the market very aggressively for this move up, okay? So I'm first looking for signs of buyers. There's a bid down here at the 77s. There's a bid down here at the 75s, but there's no bidding in this area. there's no bidding above the 77s. Very, very light bids. I mean, you got one right here, you got one right here, like very thin. Very, very thin bidding. You notice how right here, the market starts to pop up. Okay? It starts to pop up aggressively. Buyers make a new high. Look at that change of structure right there. You see how the market's moving down, 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 down. Now the sellers are getting trapped. They're trying to sell it, but it's not moving down. Passive buyers are absorbing them. The market pops up. Okay? On this pullback right here, I was thinking, okay, I'm liking this. I kind of want to try and play this long. It's holding this demand zone. We already faked out the previous low of the overnight, and we basically are trapping all the sellers in this area right here. The market pops up. I'm in here thinking that exact thing. I want to try the market long. The reason why I didn't try the market long in here on this held pullback at the 82.5s or these 83s is because where the hell am I going to put my stop on this at the 83s? If I want at least a 3R trade or a 2.5R trade, I would be targeting, by the way, this is the VPOC from the 9:30 open to about 9:48 when the market started to pop up on this little rally here, right up in here, okay? So I'm going to draw the profile over to right here. You see this VPOC is right here at these 89s, okay? If I'm going to try the market at these 80s, betting on a VPOC reversion, which is very high probability once sellers become trapped and there's a lot of value lying above, right? All it takes is for those sellers to get squeezed out, the buyers jump in, it reverts right back to the mean. This happened like 5 times today. I'll show you guys another example in a little while. But basically, this dip right here at these 80s, these bids were too far away. On this pullback, if I'm going to get long these 83s, targeting the 90s, that's only 7 points of profit. And for my stop to be validated on this trade, it would have to be behind this bidder, okay? I would have to be long the 83s or the 82s if I'm lucky and put my stop behind this bidder. Why would I put my one contract stop right in here in front of this bid? I'm just asking to be swept before this bid gets filled and then the market keeps running. I need to put my stop behind this bid to be protected. It's like a linebacker. It's something that I mentioned in the Day Trading Institution live trading room today that we host Monday through Friday. If you guys want to join that, I'll have the link for you in the description of this video down below. I was talking about that all day today. The fact that you cannot put your stops in an area where they're going to get ran through. You want to put your stops in an area that is as little risk as possible, that is protected by some sort of a bid or a key level. For me, that key level was pretty much these 78s to the 80s and this bid right here. The problem was that bid was all the way down here at these 77s. It wasn't up in here. If I saw a bid at the 80s, I could get long the 82s, put my stop at the 79.5, have a 2.5 point stop with a 7 to a 10 point profit target, and have anything from a 3 to a 4R trade on my hands. But if I tried this here at the 83s, for example, likely when this started popping up and I saw some buyers jump in, I probably would have hit this at the 83s. I would have had to put my stop. Like, following my rules, I would have had to put my stop down here at these 77s, okay? It's not going to work. A 6 point stop for a 10 point target is not going to work. That's not even 1.5 R, okay? 10 divided by 6 is not even 1.5, all right? It's not ideal. Wait, is it? I'm tripping. I don't know if it is, but whatever. It's not 2R, okay? It's not going to happen. I'm not going to put the trade on. Yeah, there was absorption. Yeah, we came into a demand zone, but I'm not going to size down on this because then I'm going to make like half of what I normally make on a 7 or 8 point rally up to this VPOC. You know, my plan for this trade was try and get a pullback a little bit deeper down into these 80s. See a bid move up. Try it ideally at the 80s. Have a tightest risk I can possibly have at like the low a day or just below that bid and ride this momentum higher and trail my stop up a little bit along the way, letting this momentum ride up into that previous high a day. Because seeing this rally right here, I was like, damn, these buyers are powerful. This thing's probably going to go for the high a day. And it did. It took out the high a day right there. And it kept going. It kept going. And then we got a dip, and then it kept going, right? Like, And then I took a loss later on that I'll show you. But yeah, so that's why I didn't take this trade. This was a nice trade, but it just didn't have the positioning that I needed for me to make it worth it to put the trade on, okay? I hope I explained that pretty in depth. Now I'm going to go to the 62.92 longs that I also missed at about 11.17. Where was that? 11.17, right here, okay? Look, I'll draw this profile over for you guys. Here you go. 11.19, I'll drop to 11.19 for you. Here we are. VPOC lying at the 6300s, okay? The market sold off from this high a day all the way down into this very sharp low volume node that was printed from earlier this morning at about 9:55. Well, not 9:55. That's when the market moved up through it. It was printed all from the open, from 9:30 to 9:55, okay? No transaction here. Very, very little transaction at the 91 3/4, 92s, okay? Context for this is a break and retest setup. The market broke out above these previous two highs that the buyers were struggling to break out of. VWAP confluence right here, okay? Market popped up, held those highs. Break, retest, break and pullback and continuation, okay? We have the VPOC, the mean, the highest volume traded price on the session so far today. The cash session, the New York session, lying at 6,300 ES. The market sold off from this all the way down into this low volume node here at the 62.92s. I was like, okay, I want to try and find signs of buyers here. I'm not going to lie. I'm really liking this for a possible, pullback upwards, right? I want to try and play the weakness to the long side. I want to try and get long, speculating that the sellers are having a struggle breaking back down and through, okay? So on the book map, I'm going to show you what this looks like. This is what this looks like on the book map. We break beneath this previous low right here. The selling gets very aggressive. You see all these large selling bubbles, okay? Now, you see we move down into this bid right here at 6291.25. There's aggressive selling right there. The market pops up immediately off of that aggressive selling. What does that mean? Absorption, okay? Absorption is when passive participants absorb aggressive participants, okay? Aggressive sellers are hitting into passive buyers, and the buyers, if they're stronger and they reload, will overwhelm those sellers, and then the market will go the other way. So look at what happened. Market's moving down, 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 down. It hits a bid. The selling basically just dries up. Look at all the selling. Dries up. Buying, 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 buying. A little bit more selling, much lighter selling, and then it pops up again. Very strong buying on this rally up, okay? So what I'm viewing in here is there are passive people stopping the sell-off. The problem with this is that after the market already popped up off that bid, I'm trying to get long. I'm trying to find an area to get long. This one bid did move up. I blatantly missed this. I saw it and I didn't think it was significant enough. It was a 112 bid. That's a lot of fucking money, okay? That's a lot of money. I should have taken this bid a little bit more seriously, because when I saw this bid move up, that's passive buyer urgency. That's a passive buyer saying, "Oh shit, you know what? I kind of want to try the market a little bit higher up. I'm urgent. I have an urgency to get into the market. I'm going to try the market here." Okay? We pulled back into this bid filled, pops up on aggressive selling. Look, aggressive selling. The market's not selling off. I want to try the market long at these 93s. But where am I going to put my stop on this? There's so many bids below. Look at all these freaking bids, okay? There's bids at the 90s. There's bids at the 88s, reasonably sized bids at the 88s. Too many staggered bids below for me to willingly put my entry here at the 93s or the 94s and be risking to like below the 88s. Okay, I could have probably thrown my stop behind this bid here at the 90s, but still, that's like probably a 4-point stop loss for targeting this VPOC up here at the 6300s. Why would I try the market at the 6294s for a 6-point profit on a 4-point stop loss? 6 divided by 4 is 1.5. My winner would have paid for only 1.5 of my losers. That's brutal. That's horrible risk reward. I don't like that. If I could try this right here at the 93s, say we got another bid thick a thick bid, 150, 770, 200 bid, 500 bid, whatever the fuck, up here at these 92s, I could try the market here at these 94s, no problem. Put my stop at this low at this 91s. I could have a 3-point stop for a 6-point winner. That's a 2R. That's a lot better. I could have a 2-point stop for I could try it at the 92s, ride it to the 300s. That's 8 points of profit on 2 points of risk. That's a 4R trade. That is risk management, okay? I could take that setup 4 times in a row, win it only once, and be break even, okay? Those are the kind of setups you want to be taking. Maximize your wins, minimize your losses, but always remember that you have to maintain the integrity of your confirmation. If I'm going to try the market, I need to see sellers failing to break the market down. I need to see passive buyers holding the market up. I need to see a value area low confluence on the volume profile like this right here. Look, value area low, perfect pullback and bounce, retest. Literal textbook, okay? It doesn't get any better than that. Low volume node, context of previous high a day, break and retest area, VWAP confluence, absorption confluence. The problem is that the bids were far away. I was uncomfortable with how far away these bids were. There was no urgency from the passive buyers. There was this one bid right here, okay? We saw this bid get filled. There's one bid that reloads. I wanted to see another bid come in here after between 11:18 and 11:20. I wanted to see another bid form in here, a little bit higher up. That shows me urgency. I would have taken a trade off of that right there, okay? Yeah, and then I'll show you basically the stop loss that I took. I bought it at the 0150s. Let me drag this over for you guys. I bought it at the 0150s right here. This was, the context of this was essentially the market was being supported at this VWAP here. Or I'm sorry, this VPOC. You see right here, there's a pretty damn good amount of absorption right here at these 6300s, okay? The market rallies up above the 6300s, key level, 6300, major key level, okay? The VPOC is right there. Volume profile, highest volume traded price on the day sits right here at the 6300s. There's absorption at the 6300s. The market starts to pop up. There's some aggressive buying happening, okay? I'll scroll over on Bookmap for you guys so you can see it on Bookmap. At the 6301s, where was it? Right in here, I think. Yeah. I took that trade at 12 o'clock. So right here, I took the trade. Seeing all this selling, failing to break down. Okay, I took this trade at the 0150s, and I put my stop at the 98s. Arguably not the greatest placement on my stop right at this bid. I should have put it below the bid, okay? I probably should have risked a little bit more money, put the stop below the bid, be a little bit more well protected. I also went in with full size on this trade, almost a 4-point stop. I probably should have sized down a little bit on this trade, give myself a little bit more money, breathing room to let it run to the downside and not take me out immediately. This trade was okay. I kind of liked it, but context for this was basically just holding at this VPOC at the 6300, speculating that the buyers would be able to run this up to the high day yet again after these two very nice rallies. The better plays would have been down here at the 80s and here at the 92s. Yeah. That's pretty much all that I have got on the session. Bookmap is a very, very powerful tool. I highly recommend everybody use that. If you guys want to join my, not mine, but our live trading sessions with a day trading institution with me, Lambo Raul, and Chris, CZ Trades, we are live on there every day, Monday through Friday, talking about the S&P 500 analysis, the order flow analysis, invalidating levels, validating levels, taking trades off of basically order flow. And we all think kind of in a similar way. We all kind of try and view the markets simultaneously and help each other. And I'm sure that there are a lot of people in the chat and the people in the audience who are benefiting. They love it in there. A lot of people are catching really, really nice trades. And we answer questions all day long. We answer questions. Hey, Marshall, why are you looking at this key level? Why is this VPOC important to you? What's some context behind this level? We go over everything in detail. If you want to join, I'll have the link down below. Yeah, it's really, really valuable. I'm on there every day. So yeah, feel free to go do that. For now, I hope you guys have a great rest of your day. Hope you took something away from this video, and I hope you learned something from my execution today, and lack thereof execution at 11:15 and about 9:48 or 9:47, whatever this was. Yeah, 9:47. Yeah, that's all I got. Everybody have a great day. Don't hesitate to reach out to me. I'll answer any questions you got. DM me on Instagram at bids and offers. Follow me on Instagram. Subscribe to me on YouTube. Whatever you want to do, I'll answer questions. I'll help you guys out. And my goal for this channel is to basically just try and show you guys what I think on an intraday basis, and the setups that I miss, the setups I take, the setups I win, ideas behind order flow stuff, because I know what it's like to be stuck and not know where to look on YouTube, and not know who to listen to, and not know who to follow, and which videos are real, which are not. I'm trying to keep it as real as I can with you guys, and I hope you guys take something away from this. Have a great day. I'll see you in the next